Good evening. Whoops. Hello. Okay. Good evening, everybody. So, thank you very much for coming here. This is going to probably be the most irreverent panel you've heard for a while. And the reason being because I'm going to run it a little bit differently from a normal panel. You see, when I was told about this panel, how can technology answer the questions still unanswered in fintech? I incorrectly thought that I was going to be invited to sit on the panel, and I thought, well, this is going to be the quickest answer ever, and I was going to say, it can't. And then they went, no, we want you to moderate the panel. And I thought, oh, this is going to be a lot tougher now. So I thought, how can I make my life easy? See, if you want the most efficient way to do something, give it to a lazy person. I'm a lazy person. I always find the shortcuts. So I had a chat to these people, and I'm not letting them introduce themselves at all, because actually they're not representing their companies. They're here because they're really smart and they have opinions. If you want to know who they are, I'm afraid you're just going to have a look in the agenda, because I'm not letting them talk about themselves at all. They're going to be talking about the topic. How can technology answer the questions still unanswered in fintech? So I thought, well, the quickest way of me doing that was for them to tell me what the unanswered questions in fintech actually are. Because I don't know what they are, and I'm too blooming lazy to try and figure them out. So I thought, well, tell you what I'm going to do. I'm going to play a bit of Jeopardy. Are you guys familiar with the way that Jeopardy works? The game show? No? Oh, geez, I was just checking that you were alive then. American. Yeah, it's a bit, okay, it's American, but, you know, we've seen a bit of pop culture and that kind of thing. So in Jeopardy, the host gives the answer, and the guests have to actually give the question. Now, this is brilliant, because we've all got all these fintech trends and buzzwords flying around it. Erlang have actually done a whole fintech trends report. So I just opened it up and I went, buzzword, 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 buzzword. I went, great. These are all the answers. What the hell are the questions? What are the unanswered questions that they're solving? What are these things actually doing? So I thought, okay, I'm going to play some Jeopardy with the panel here. So they're going to have to improvise, because we haven't got any technology to support this panel. So they haven't got buzzers. So the first thing that they're improvising on is they're going to have to make a buzzer sound, you know, to be able to answer. That's going to be the first thing. I said it's going to be a little bit irreverent, right? Chris and I have just spent the last 2 days in a really hectic Fintech Week London, and we sort of in decompression mode, and we thought, this is a networking event. Actually, we were expecting pizza, and the pizza's coming only at 7, so we're really like a little bit chilled, and we want to have a bit of fun with you guys, so I hope you don't mind. And we will give you the opportunity to ask some questions of the panel as well. So I'm going to start off, and we're going to give this a bit of a test, right? And I'm going to throw out an answer, right? Buzzers at the ready. Yeah, there we go. Genevieve is already practicing. Right? So this is Jacky, Genevieve, Chris, and Ritesh. Okay? And that's all I'm going to tell you about them. If you really, I'm taking it that you're here because you've actually read the program, or unless you just hear you thinking, well, they're keeping me captive for 45 minutes before they'll feed me pizza, so this is just something I have to do. And they're not serving us any more beer until they, are they allowed to sneak down and know, okay, right, you've got the barrier there, right? You can't even sneak down and get more beer. You have to sit here through the next 45 minutes, right? So we're going to start. And I'm going to throw out an answer, and I want you guys to give me the question. Blockchain. So, Chris, obviously, you've got an answer. A question at least, right? What's the question? What is the unanswered question in fintech that blockchain is the answer for?
What's been the biggest failure in technology?
Beep.
Okay, do you want to expand on that before I hand that to Genevieve? Because she's challenging your, right, yeah.
Well, it's just that, you know, how many live production mainstream systems on blockchain are there out there? I don't see that many. And yet everyone was buzzing saying there's going to be loads. by 2020 they were saying. It's now 2022 and there's still hardly any.
So you can't think of any valid use cases for blockchain at
I can
all?
think of loads, but they're nearly always involving, governments and industries and financial institutions and corporates having to work together to agree common standards, and they can't agree any standards. So the technology itself is a great idea, but it's a solution looking for a problem that can be solved, and the problem can't be solved because no one can agree anything.
Interesting. Genevieve,
I think it's because you're asking for agreement rather than consensus. And so what I think is that it's the challenge I would have is the technology, the way we implement technology is more about how much can you make from it rather than how can I actually build it for the people who need to use it. And that has been the failure, I would say right now, where we are building solutions, as you say, for problems that are not exactly the way people want. And it is really about, this technology is about collaboration. So unless you can collaborate, you might as well put it. But also, I think that the other premise has been that this is about de-sitting people. I'm going to get rid of government. I'm going to get rid of banking. I'm going to rid, when in reality, it's about creating that responsibility, accountability, and consulting or inform. And until you start putting those things in, you're not going to basically solve it with the technology. So agree and disagree.
Beep.
Go for it.
My question is, how secure is the data
How
Is it that secure
is the data?
in the block? Yeah.
Interesting. And what's your answer to
I
that?
think it's not very secure. I think it's their only value proposition for the blockchain. I think they're making too much of the data sovereignty. But I think there's a lot more to blockchain than just data. So for me, it is what you're going to do with the data.
You can do a lot with the data.
And AgriLedger is actually a little bit of an opportunity to plug what you guys do there. Actually,
I wasn't
and I know
gonna
you
plug
weren't.
it.
Yeah, I know you weren't
I
plugging with it,
think
but it
that-
is fascinating. Can you just expand to the audience about what you guys have been doing?
So what we've been doing is we've started the process of really working with the smallholder farmers, those people who are at the bottom and what I would call the first mile, and creating a more, so the question is why blockchain? Well, because if you were to put the information onto a centralized database, the person who's going to take care of it is going to be either a government or a company, which means that they can actually modify things. So it's about creating trust across the value chain. And this is not supply chain, it is value chain. And as things grow, and this is why the data is important. And one of the things that you said, which is very much on my radar, is confidential computing. How do you now, because what people don't realize is when it goes from node to node, the security is no longer there. The data is open. But so we need to create those things. And I would suggest that there is opportunity. We're probably about 3 to 5 years. And to answer your question, 2020 to 2022 has been a write-off.
Well, not really. I mean, I know quite a lot of fintech startups that started in 2020, and they've been doing very well. It's not a write-off because we've all been Zooming and connecting, but that's not the same as meeting. But you can still develop blockchain solutions remotely.
We actually delivered it remotely because we couldn't go to Haiti because it was on lockdown before 2019 was lockdown. So we delivered it by training people over Zoom.
I actually thought you said you couldn't go to Hades, and I was thinking...
No, couldn't go. Couldn't go.
No, you said Haiti. I thought you said Hades, as in...
It was hell.
So what is the unanswered question in fintech that blockchain is the answer for?
Inclusivity. Beep, beep.
Inclusivity.
Yeah, financial inclusivity.
And
Okay, how does...
and consensus, going
And
back to
digital inclusion.
consensus,
Yeah.
Digital inclusion.
Yeah.
digital inclusion.
and provenance,
Beep, beep.
proof.
So,
We're trying to keep you out of it.
It's GBA, you know?
So inclusion, I've got a question about it. When we say the inclusion and the digital inclusion, that's a far off, right? Because I don't see the blockchain is going to solve the inclusion straight away, because that's the infrastructure problem. And that's not only in the infrastructure. Unfortunately, when we talk about the inclusion, right, you need to consider not only the financial, digital exclusion as a major issue. And let's not get there in terms of the financial inclusion across the world and cashless society and everything else, because that's a fundamental infrastructure challenge, and more than the infrastructure, that's a public policy challenge. So what blockchain can solve up to a certain extent, that is through the identity, right? So the first thing that need to be sorted out for the inclusion is the identity, and then you move on with anything else.
Beep, beep, beep.
Oh no, Chris, Genevieve has beeped there. And actually, we've got to get back to Jacky as well, because she started this thread on the
I would
exclusion.
suggest that my concern is until we look at privacy.
Yep.
So that's where blockchain right now, it's not being built with privacy by design. So until we do privacy, I don't want my digital identity. I might want my footprint to be evidence, but I don't want details about me on chain.
Beep, beep.
Wait, let's just come back to you before we go back to Chris and then back to, see, this is working there already.
Well, I think
What-
for me a great example was the first mouth to feed.
Yeah.
Those are the guys that we generally don't see. We don't feed those mouths. First we feed top of the food chain to the bottom. And I like your approach, it's bottom up.
But apparently the VCs don't love it very much because I'm trying to break something.
So Chris, what were you saying about the
Well,
inclusion?
no, I mean, going back to why I made the comment around what's been the biggest failure in technology recently, is because I just thought, remember so many headlines and conferences that I went to, 2015 to 2018 in particular, such as the United Nations in DC had a meeting all about identity in 2016, saying that they were going to start rolling out proof of work using blockchain technologies with Microsoft and Accenture for Sustainable Development Goal 16, which is 16.9 as a legal identity for everyone on planet Earth. Didn't happen. Sierra Leone announced they were going to roll out blockchain for digital identity in 2019. Hasn't happened. The Dubai government announced in 2016 that the whole of Dubai would run on blockchain by 2020. Haven't seen anything about that. So there was all the buzz and the hype. And you know, there's still a lot of work taking place in the background, like yours and others, but it's just taking so much effort to push the thing uphill.
So I think one of the challenges also, it costs a lot to do blockchain. And it's much easier to continue with what isn't blockchain. Also, so the only thing I take from the thing that will not be named is it pays for itself. So we need to start thinking in a different way of how things pay. So really, the product paying for itself will be the way of actually creating what is needed in terms of, and I think this is where I've sort of been saying, what are we doing FinTech? We talk about financial technology. We look more at the financial rather than the technology. So you've seen a lot going on in the blockchain space in terms of fin, so the DeFi, all those things happening. But the tech, they haven't taken care of making sure it was resilient.
And the core of that is actually not how do we make the technology pay, it's how do the people developing these technologies and implementing them make money out of it.
Ritesh, your response was?
So the focus is around what I've seen. It's quite a lot of concentration, right? What we have seen, there are different models. So again, sorry, I'm going into the broader spectrum. We have seen US model, European model, China, and now I talk about the Indian model as well. And when I'm saying the model, it's about like how you build the infrastructure and stack in the country. Specifically, I'm referring to the digital public infrastructure. And one of the best example that you could see is the UPI, right?
Expand just in case the audience aren't aware of the UPI.
So the UPI is Unified Payment Interface, and that's a digital public infrastructure in India to enable payment, digital payments. And what we are looking at, we are, as India, is leading the world in terms of the number of digital transactions today. In next couple of years, by 2025, 2026, the expectation is around going to 1 billion transactions a day. So the whole idea is around don't just get bogged down with the regulation. And unfortunately, that's what I've seen across the various models. China is very straightforward. Regulations enforced. European, regulation, consensus. US, regulation, driven by public, or rather than the privatization, right? The GAFAs, the big techs. India, it's a digital stack, build up, and the public-private partnership building the product and services around it. So we need to think and learn from the digital stack model and think from that perspective so that we don't see the concentration in the market. And if we talk about the concentration over here, we know the GAFAs, the big techs, or even in UK for that matter, right? Credit card market, highly concentrated. 5 players on the 92% of the market. Financial institutions, highly concentrated. And that's why the evolution of the fintech or even the open banking.
So technology can help to increase competition so long as the regulation and the infrastructure is determined centrally, or at least enforced, to be able to be open. So technology can solve an unanswered question in terms of how can we increase competition to be able to make it fairer, access, easier, quicker, faster. What's the key? What's the main benefit of the UPI in India?
So the main benefit of the UPI is the digital payment adoption across the country, right? It has definitely enforced the digital inclusion as well as the financial inclusion across the country. I will not talk about the financial literacy because that's a separate challenge. We can talk about that.
We'll talk about that in a bit.
So it has definitely put India on a different stream in terms of the growth. And it's not only about the UPI. Today, if you look into from commerce perspective, e-commerce, and the first thing comes into the mind is Amazon, right? Highly cash liquid company. They can deploy their cash in any market and capture the market. Do we really want to continue with that? So what do we do about it? How we can enable our MSMEs and the other merchants to play part in the economy? You got to build a stack where everybody play a part and becomes part of it, and build an interoperable solution so that MSME, whether it's a big player or a small player, they can play around it. So you can reduce the market concentration. So the answer is, don't wait for the regulation. Thank you for the privacy, right? We don't need to just wait for the privacy. Your infrastructure stack can enforce the privacy. So and I'm completely onto it, do not wait for the regulation. We have already seen that in the market-driven and the regulatory-driven, whether it's open banking or the various other products, say buy now, pay later for that matter, right?
That was going to be one of my next buzzwords. So I'm going to kick that one off because it really is. So buy now, pay later is the answer. What's the question? What's the unanswered question that buy now, pay later solves? And apologies to anybody in the audience who is BNPL, but I really have got a bad reaction to
beep, beep.
Let's give Jacky some airtime here.
The question is, can the economies do without retail credit?
And the answer is BNPL. Do you think it's a good thing or not?
Man, I'm going to be subjective. I'm sitting on the fence with this one because I believe for a certain segment of the market, it's fit for purpose. And I believe there's another part of the market where it's not fit for purpose because regulation, we haven't waited for that. So I'm a bit on the fence with that one. Do I consume it myself? I don't have to. But I do believe there's a big market out there that potentially it could ease the burden in a short term. But I do also think, like I'm very vocal about my opinion about the mortgage market in Amsterdam or in the Netherlands, there's a bubble, and we just don't know how big it is.
And BNPL?
It's a bubble.
You had also beeped for BNPL.
So thank you. BNPL, it's an interesting proposition. Nothing new.
No.
We have seen that, been there in the past. It's like tokenization, right? American Express came with the tokenization way early than its time. But then Apple Pay came. BNPL was existing in the market, but technology and the channels has reduced the friction across the customer journey. It's a great product, but at the same time, it got to be controlled. If you have got access to the customer data at the BNPL, and if you can put friction in the checkout journey and let customer know that what they are getting into, and if you can enforce controlled behavior, it's a great product. Otherwise, we are seeing a debt-ridden society. We are going to see another payday loans.
So I'm glad that you said let the customer know, add some friction in. This won't be a jeopardy, this will be a straight up question to you. One of the biggest problems that I see, and I do think that technology can help solve the problem, is financial literacy. You know, and people often think of financial literacy as something that's a problem in other countries. You know, that's a problem somewhere else. That's not really a problem here where we are in the West, and you know, we're all financially literate. Bullshit. Right? I can tell you that the vast majority of people in this country are not financially literate. They don't understand the consequences of credit, credit cards, of long-term and short-term credit, of investing. Most of them wouldn't even be able to construct a budget for their own lives, particularly factoring in paying off their credit card debt. And they all get into it. And my worry about BNPL is not so much the BNPL, because I think an astute consumer would understand what it means. But most consumers are not financially literate. And it does get worse when you go into other. So I'm asking all of you here, and again, buzzers, how can technology help increase financial literacy?
Beep, beep.
You guys better be faster on your buzzers, otherwise Ritesh is having all the airtime here.
Let me give you a bit of insight on the financial literacy in this market. We have done a deep research in the market survey with sampling of 18,000 in the UK. 78% credit card customers do not know when they make a minimum payment on the card, they incur higher interest rates. 78%.
And that's in the UK.
That's only in the UK. And we are a developed country. 70% people do not put direct debit onto their credit card for XYZ reason, and they end up in paying late payment charges. And in this country, where the market is highly concentrated, 5 players own the 92% of the credit card market. Outstanding credit card debt was 70 odd bill before pandemic, which has gone down to 56 bill. Now, thanks to pandemic, we got better with the debt, right?
Yeah.
At the same time, between 5 and 6 billion people pay in late payment charges and the higher interest rates on the credit card in this country. 66 million credit cards on 60 million population. So on an average, we hold 2 credit cards per person. Massive challenge. And that's why I precisely said, the buy now, pay later, it's a great product. Credit card is one of the best products in the financial history. It offers you 30 to 45 days interest-free credit, but only if you use it a right way. Dynamic credit checks are must. Credit card, you have got a credit limit, and you can keep swiping on. Your profile might change, but your credit limit won't. But buy now, pay later, you have got an opportunity to control that. What we need is the bureau data. Today, we don't have that. And likes of TransUnion, which they are forcing into getting all the data from the buy now, pay later companies so that they can do the dynamic checks and look into the credibility in the real time. That's what is required.
But that's changing, that's a transactional thing. My question is, how can we increase financial literacy? Not stop their spending.
Yep.
I want to increase financial literacy. But you've had airtime. I'm going to let Jacky respond.
That's such a good.
At last, you've actually pressed your buzzer there,
Beep,
Chris.
beep.
Yeah. Jacky.
Good point. It's not here in the UK, right? But TransUnion in South Africa very much makes its bureau data available to its financial institutions there. And TransUnion actually led in South Africa the whole affordability model check. And what they did with that affordability checking, working out commit versus, what the income is, they actually could give the consumer insights to say, listen, you're completely overcommitted. Therefore, decline. Decline, bank, decline, because this person is already 80% over, commitment, so they're just living on credit. It's a very interesting topic, but But I do believe that in certain markets, the technology lags versus in others.
I wonder if it's the, sorry.
You didn't press your buzzer,
Boo.
Chris did.
Beep, beep.
Chris first, and then we'll come back to you, Genevieve.
So
Got to get into the discipline of pressing your buzzer there.
I want to widen it out, because if the question is financial literacy,
Yes.
it's not actually in the interests of financial providers for customers to have financial literacy.
So how can technology improve it? And it doesn't have to be from a financial service provider. I said, how can technology improve the
I haven't
financial
finished answering the first question yet. Because you could take BNPL or payday loans, and they got shut down eventually by regulation in terms of payday loans. BNPL might get that too, but there's nothing wrong with the actual concept. But if you take it out further to loans, credits, mortgages overall, that's how retail banks were making money. And I always remember being on a panel when the 2008 financial crisis hit. And one journalist on the panel said that the retail bankers became very much like drug dealers of credit. You're pushing the customer further and further over the precipice until they can't pull back. And that's how you keep them under your thumb. And that, to me, is still part of the moral compass of banking that we haven't addressed with regulations, which is if you give customers self-approved mortgages that they then can't pay back, is that their fault or yours? And the answer is you make it feel like it's their fault and they go and jump off a cliff. You need more, not just financial literacy, you need more financial oversight of how the drug pushers are making their money.
Yeah, no, I'm with you there.
So
Genevieve.
your question was, how can we use technology for that? I
Yes.
think that we can take the data. There's plenty of data out there to do the education, but we also need to make it simple
Yes.
language and sort of like explaining the consequencing and gamifying it, I think. And that's the part that, so as was well said, the banks don't want that to happen. But there is an opportunity to do this. But then the problem is that who's going to make the money? We always say, who's going to make the money? And there's no money to be made, only money taken away. So therefore, you're going to get killed before you start going at
But
it.
we have things like experience, talking about data. And I find it interesting that, and I made the comment in the last 2 days, that the people who have the least pay the most for financial services, because that's how you
Yep.
keep people down. If you're wealthy, you're not bothered about credit and lending. If you're poor, that's how you live.
You're right, but what happens is that, let's just say somebody came out of here and decided to build a technology which is going to, we have the AI, machine learning, all those things to be able to create this. But that company will not survive.
So,
Yeah, go
beep,
ahead.
beep. And that's what precisely I said. You got to think from the digital public infrastructure and the digital public goods perspective. You have to think, otherwise, if you leave it to the private companies or the financial institution, it's not
not in their interest.
So if you build infrastructure, right, and let it run and enforce the policies around it, and let's build the public-private partnership, and that's what the answer is going to be. So yes, technology can definitely enable and help it. But if you think that you are going to build another private organization which is going to run the financial literacy program across the country, who's going to fund it?
Yeah, but I can see you can do that in India because of a very different structure of thinking and advancement of infrastructure. We wouldn't see that in UK or America or Europe.
That's the biggest challenge. But again, we got to open banking was a great opportunity, right? It still is because it's in initial stages. We are eyeing for the open finance, which we are already seeing the application in the future. So it's a great opportunity. We got to think it more from the infrastructure perspective, that how we can enforce the regulations through the infrastructure. And when it comes down to the literacy, right, it is not only a financial services challenge. And similarly with
100%
the
agree.
inclusion as well.
Yeah.
Yep.
So let's be realistic. Whether it's financial inclusion or financial literacy, that's not only a financial institution's problem.
It's a
That's a
societal one.
public policy challenge.
Agree.
So policymakers got to act onto it.
So do you see this as a role that should be taken by companies, organizations as the World Bank or IMF? I mean, we've been giving them money for a long time.
And they have been there for ages, but we haven't seen that enough action. So it got to be the country level.
Yes, I agree. I think the World Bank is far removed.
It's
from-
50,000 level view.
Yeah.
It doesn't work.
Now, I'm going to throw in a little bit of a spanner in the works here, because you guys are all saying it's of no benefit to the financial institution to increase the financial literacy of people. And I'm going to lean on a fellow country person here. And Jacky, I'm hoping that you can jump in and give more of an example here. But in South Africa, Discovery Bank uses psychology and nudges to be able to change people's behaviors. And they've been incredibly successful.
Agree. I worked for a competitor, Investec, and we kept our eye very close on Discovery, because what Andrew Gore did, and he does it very well, is the psychology part of it. And he uses data to drive that insight. And he's very clever, because he started with the medical product. And then you've got the vitality. So he incentivizes you to keep, I still wear the...
To get physically fitter.
Exactly, I'm still wearing the stepper, right?
And
it's
then
psychologically for me now. Then he started the insurance business, so he gets more of you, he gets more insights of you. Then while he was doing this, he was busy building his bank. It took him 10 years to build that bank, but now with the nudging strategy, and I know because I'm a customer of theirs still, he nudges you to invest. So he'll say, based on your vitality, status, if you're on platinum or whatever, why don't you invest 10,000 rands, and I'm going to meet you with 10,000. This is an example. But that's what he does with that nudging. And for me, I'm financially literal because I'm from a bank. I understand banking. So I put the 10 in, and he puts the 10 in, so I get it. But that's what he does with that data. The more he knows about the person, the more he builds on the psychology of it.
And it builds their wealth.
Yes.
It doesn't, so it's actually of benefit to the bank. They're not making their money from charging the people the overdraft. They're making their money because their customers are getting financially fitter. And I personally am very passionate about the fact that technology can help, but at the moment, it's the financial services models are stuck. And we've just spoken about this on the previous panel, legacy thinking. Because legacy thinking is forcing them to think the only way that we can make money is from late fees and credit cards and that kind of thing, as opposed to thinking
Deposits.
Discovery Bank completely changed the game.
So it's a coincidence that Adrian was one of the interviews in my brand new book, shameless plug, Digital for Good. But I interviewed him because I was looking for good examples of purpose-driven finance.
Yeah.
And the whole group started just over, I think it's now 26 years
Yeah.
ago, with Adrian saying the whole mantra and purpose of our bank is to build wealth through health.
Yeah.
And
Yes.
that's a very simple statement, but putting that into practice is quite hard. Now, when you take that further, what you see is all the designs of the products and services that began in insurance and now are moving into banking are all about building wealth through health and taking that into vitality. Vitality is over here.
Yeah.
But what I realized as I went through the discussions with him, Monzo and others, was that all of the newer companies, like a 26-year-old financial group that still has a strong founder with a strong vision, have those values very clearly in the whole way in which they think about their products and services and the people they hire and how they operate. And I can imagine, take Barclays Bank Group, for example, when they started in 1697, showing how old they are, it was Quakers.
You were around then, weren't you?
No, he was.
1697.
Well, I was going to say, I remember having that sort of mead with you back in the bar down there then. And so, they had those values when they started, I'm sure. Where are they now? And in fact, when I know the values that Barclays claim to have, but equally I know that it's just corporate speak. It's
Yeah.
not. There's no
There's
passion.
a lot of washing going on.
Beep.
Beep.
Do you think, though, I think the challenge I would have is what can be done in South Africa or can be done in India is much more agile in a way, and you can take people that way. While here, if Barclay was to turn around and start saying, we're doing it for the good of the customer, everybody would look at them. Even the consumer would be like, "What's wrong with you? What did you drink?" So I think that the idea of being able to learn and bring that in, and maybe this is where the fintech company, because so the young companies, should be taking these value set. Right now, there's no value set. And it's more about, this is how I make money, this is how I'm going to make my money, and therefore I copy what I've seen from before. And
Beep.
so-
Beep.
yeah.
So what I could see, like in finance world, we are going back to the values, and we have to, regardless. Yes, it's all about making money, but making money while building a sustainable business, and good for the society, good for the people. And there's no other way around. Due to sheer competition in the market. So the fintechs are basically influencing large financial institutions to flex their muscles and build up at a pace the right products and compete. And thanks to open banking as well. So what I see, that yes, we are going to see a bit more sustainable products in the market, whether it's by choice or by force. Because customer is a bit more aware than what they were earlier. When it comes down to the financial literacy, again, we really need to set out the standard that what do we mean by financial literacy? Having a bank account? Unfortunately, a couple of months back, I was sitting with the state head in one of the states in India. 89% people have bank accounts or some sort of product. So the financial inclusion is 89%. But when it comes down to the financial literacy, that was 24%.
Mm-hmm.
And the ADB and the UNICEF and the World Bank and everybody was a representative. And my only question was, could you please tell me and please explain me, how does it work out? You have got financial inclusion 89% and the literacy 24%. And I bet from this stage, it's no different in this country as well. So we need to be clear that what are the standards. And when I asked the question, it was very simple for people to respond that if people have a bank account or a finance product, they are included. And I said, what about the literacy? So there was no standard.
No. No. We don't
So we
know
need
what it
to
means.
set out.
But this brings me back to developed market and the emerging market. I think the emerging markets has no other option but to develop the literacy, because they're forever having that emerging market questions that they have to solve. You know, Europe, and I'll use Europe as an example, they have the luxury of having money. They have the luxury of, you know, the coffers are full. So they're talking about central bank digital currencies. If I look at central bank digital currencies, the first thing that comes up for me, that comes from an emerging market, is control over population, control over spending, control to make sure the economies do well. It's for me a very European thing, a very American thing. If you talk about the central bank digital currencies in South Africa, I don't think it's a topic that matters, because there's other topics that's far greater and more important.
But I was going to say, but you are having central bank digital currency in the Caribbean, and that's taking off because that becomes for them an ability to remove themselves from the control of the US dollar. So it's also, you know, you should be asking yourself the distribution and liquidity availability is one of the challenges. So now you start using that ledger sort of a balance. There's no real cash being moved around, and the economy is just floating.
But it's an interesting topic that you're making, and I also used to have a compliance hat on. For me, that was controversial to see that happened, because I'm thinking, what an opportunity to move money through the Caribbean now in the block, unanswered. You don't have to look at, you know, you don't have to look at anything bearish or anything like that, because it's in a hidden environment, the movement of the money. So that is quite a controversial one for me. I'm a bit on the fence with that one. It's more off microphone conversation.
So, sorry, Ritesh, did you have a response?
I was just referring to a bit unattached or different topic. related to the banking and the fintech itself, that yes, we are coming out of the universal banking business model. That's what we have seen so far, and the banks are risk averse and everything else, right? Now we are seeing that is changing slowly and gradually because of the fintechs, because of technology, because of customer behavior, adoption, digital, blockchain, AI, ML, you can name it. So we are seeing that change. It will take time, but at the same time, the policy makers has got the equal responsibility and more responsibility. When this change is coming in, it got to be right.
Beep. So can I show after I read what Chris should be talking about, which is the idea, because I read the piece you did the other day, that in the fintech world, we're not working early enough with the regulator. So that's really something that needs to happen, and you need to take that hat, either as Vitality did, where I want to, these are the outcomes I want to have, or if I'm going to do a buy now, pay later, that I want to create the mechanism to where the regulator is not going to come in and knock at my door because people who shouldn't have gotten the loans are there.
Beep. I'm very interested what a VC would say to that. Because I think if a fintech has to wait for a regulatory body, I think you remove the speed advantage of the actual industry itself. It's, for me, I absolutely agree in regulation. I think it's something that you have to follow with my compliance hat on, but I think there's a speed advantage as well. But I think there's a responsibility, and this is where I always look to a founder or to a CEO as a human being, saying it's okay that you're doing that product, but it's like you're saying, it's like, are you a drug pusher, or are you for longevity, financial health? Are you a contributor to a healthy society, or are you a contributor to your own bottom line? Because the founders do make a ton of money through their venture capital injections, so they don't have to potentially make more, if I can put it that way.
Yeah, I mean, the point I was making when I was writing about it is that the regulator is allowing and encouraging innovation to happen, which I think they should. But the question is, when do they need to step in and stop the innovation and start to regulate it? And there's many examples. China is probably the best example on peer-to-peer lending, where over 5,000 companies had launched into the marketplace over a period of 10 years. And finally, after 10 years, the People's Republic stepped in and said, well, to do this, you must have these following rules. And something like 4,900 peer-to-peer lenders collapsed overnight. And everyone lost all their life savings and money. But now we've seen the same in crypto. Trillions going into cryptocurrencies, mega crash of cryptocurrencies, people have lost their life savings. The answer is they shouldn't have put their life savings into cryptocurrencies, but they didn't have the literacy to know that. And the regulator allows those markets to run. When do they need to step in and stop the innovation? Now, it was interesting because China very early tried to shut down cryptocurrency exchanges, but in Europe and America, it kind of wasn't, I won't say encouraged, but it was encouraged that they were regulated as exchanges. But by regulating them as exchanges, people therefore then thought it legitimized them.
As opposed to China, who shut them down, then has now launched a very successful CBDC trial, which and that's probably going to become a model for a lot of the rest of the world. I'm going to, last thing before we wrap up, because I think pizza might be coming soon, right? Yeah, we're nearly getting on there. So there is one of the unanswered questions in fintech that I see a lot of people struggling with is, how the hell do they attract the right talent, particularly when the talent that they're competing for can go and work for much sexier places like Google and Facebook and things like that? Who wants to work for a boring bank? So can technology help attract the right talent in financial services? Or how can technology help attract the right talent in financial services? Or can it? And anybody for that?
Beep.
No? Okay, go for it, Jacky.
Not everyone might share my sentiment, but I honestly do believe that the way you structure a deal, as you would in a corporate and investment bank where I'm from, you structure a deal with a human being. You don't just put salary in front of them, you put shares. Looks like structure. Structure a package that attracts them.
No
Money,
technology involved whatsoever.
no one retires with pats on the back. You know, and that's the issue. It's for me. I see that as a main issue.
Precisely what we are seeing across the global market, and it's a big challenge. The talent is scarcity, whether it's UK, European, Asian, anywhere, right? The full stack engineer, we used to say India outsourced quite a lot. The salary of the full stack engineer in India, top notch. I'm talking about top notch engineers, could be as good as London, right? You land up in paying quite a lot of money, but to attract the talent, obviously you got to structure the deal, but at the same time, from the technology, you need to think more from instant gratification perspective, right? From a consumer perspective. As a consumer, when we go to buy something, if you get a deal of 5% off or something on the top, you're happy. So you got to think your employee as a human first, then a resource, then you will be able to retain them. It's not only about the money. Not everybody, yes, we got to pay the bills. People work for money, but money is not the everything for everybody, right? So you got to build an environment where people can flourish. They can walk themselves into the work, where they can come and discuss openly and share ideas. And that's the right culture you got to bring in to retain talent. I don't think any other way.
I've asked this question of quite a few banks, and their answers consistently seem to come back to the same things, which is most rock star developers want to feel they're making a difference and that their work actually is meaningful and delivers change. And so if you're working in the right bank, where they're lean and agile and they have all these sort of flattened organizations that allow small microservices architecture structures of teams working together to act autonomously and not in a restricted way, then they can see the change they make to code on a Friday is being used by their mum and dad or friends on a Monday, and they go, that's making a difference. And so the developers can start to feel that their work is meaningful. And more than that, and JP Morgan Chase made this comment, is that if you were working for Google or Facebook, you'd be in Silicon Valley that's going to cost you a fortune in housing and other costs, whereas we'll allow you to work anywhere across America. But if you want to work in Silicon Valley, we've got a campus there between Google and Facebook where you can actually be in that environment, because they've opened a large developers campus, which is experimental. So you can work on experimental new technologies and other ideas. And then a comment that was made to me quite recently in the current meltdown in fintech, and particularly in BNPL, for example, is that if you've got hundreds of people being laid off by the Klarnas of this world, who do you think is going to pick them up? The big banks.
Genevieve, any last words on that one? Because we're going to wrap up the panel on that.
I would just say the key is purpose. So it's really how do you bring in the 3 Ps, people, planet, and purpose. And that's really where we're seeing it. And I think when we start looking at the Gen Z, this is what's important. And in reality, that's who we're probably building for.
And if people need 2 Ps, there's the toilets.
And on that note, please give my panel a round of applause. Thank you very much for your comments and insights. And with that, I think that we've got pizza and beverages, alcoholic and non-alcoholic, downstairs. Am I correct? I'm looking around for the organisers to signal yes.
Thumbs up.
All good? Yes. And please carry on with the conversation with these people up here downstairs in a social environment. Thank you for your time tonight. Cheers.